All right, welcome to Coffee with Marcus and Mark. And in this show, we're going to talk to you about what's happening in the markets and how we are trading it. And today, we will show you when to roll your options because for most people, this is a difficult decision, but we will show you some real life examples that will help you in your trading. So stay tuned. And also, if this is your first time here, hi, I'm Markus Heitkoetter. That super smart guy over there is our head coach, Mark Hodge. And we are real traders who trade live accounts. And we got a shit ton of trading experience. And we're showing you how to trade these crazy markets. And trust me, we know our stuff and we're not afraid to tell it like it is. And if you're looking for some honest insights into the fascinating world of trading, then you are in the right place. Now, before we dive in and show you our accounts and how we are trading it, Mark, let's take a look at what's happening in the markets here. I mean, holy cannoli. First of all, yesterday, pretty good day, right?
It was a great day, Marcus. I mean, we bounced back after starting the week slightly lower. Down day on Monday, down day on Tuesday. Wednesday came right back with some nice gains. S&P up a little more than 1.5%.
Yeah, so I'm bringing up a 5 minute chart here of the E-mini Nasdaq, and I mean yesterday it was for the market. What's not to like? If we are going back to Wednesday, there was some nervousness about the visit of House Speaker Nancy Pelosi in Taiwan, and then some uncertainty about okay, how will this affect the U.S.-China relationships? But then she left after less than 24 hours, and yesterday. I mean, what's not to like about it? ISM manufacturing index came out better than expected. Fed member Bullard said, you know what? I don't think we're in a recession. And if he says it, apparently we're not. So markets up, and away yesterday.
Yeah, real nice move there. Nasdaq up. I think it was like 2.6%. So solid day. A little bit mixed today, but great day yesterday.
Yeah, because tomorrow we have the big report coming out, and this is where traders seem to wait off what's happening. So let's take a look at the economic calendar here. And so tomorrow the big one is the jobs report for July, and this is where we want to know: okay, are we in a recession or not? Because first of all, everybody said, well, once we have two consecutive quarters of negative GDP, we are in a recession. And then the National Bureau of Economics Research said, no, there's much more to this. For example, we also want to see that the jobs market is getting worse. And this is why I think tomorrow's report will be important.
Yeah, and I mean, you have the monthly jobs report always reported the first Friday of the month. And so it is something that traders do pay attention to. But you're exactly right, Marcus. With this recession talk, we have the two negative GDP quarters, but jobs and the job environment right now is not indicative of a recession because jobs remain strong. So traders are looking at the jobs report. Are we starting to see a slowdown? Is this becoming, showing slower growth, slower jobs, slower income? So far, it's been really strong.
Yeah. So we'll see what happens tomorrow. I mean, as you can see, nothing is really in terms of forecasted, nothing bad. It's pretty much everybody suspects that it stays at the same level as it was the month before. And you know what? I kind of agree because all these Fed measures of raising interest rates, they haven't really, made their way into the economy. I mean, this morning we heard from Walmart that Walmart will now start reducing their workforce, basically firing. We heard it from Robinhood yesterday, but last month we just heard about okay, we're slowing hiring and not really that that companies are laying off people. So this is probably something where next month's jobs report will be more revealing.
Yeah, you have a good point there, Marcus. We know that things tend to be lagging, just like with the inflation data, right? The energy costs and prices were down substantially, but that didn't come into play for the last CPI data. And now it could come into play where we start to see inflation falling a little bit. Same with jobs a little bit delayed. And I agree, next month could be a little more revealing, at least showing an impact on what's going on with the overall economy and businesses and companies slowing down their hiring.
Yeah. And that's what we see today. I mean, a little bit lackluster trading. We opened higher, pulled back a little bit, and right now we are pretty much for all major indices slightly lower. But I mean, there's really nothing. If you look at a 5 minute chart of the Dow, if you look at a 5 minute chart of the S&P and the Nasdaq, not a whole lot going on. Now,
Yeah.
go ahead.
Oh, I was gonna say we turned negative for a little bit, dipped into the red there, but uh, as far as this market goes, this is nothing right now.
Yeah,
Just wait.
absolutely not. Absolutely not. So this where in a moment we want to show you our positions and also when to roll an option because when you're trading the wheel at some point today is Thursday and we have options expiring tomorrow. At some point you have to make a decision: should you roll an option or not? But let's take a quick look at a few headlines that we had here this morning. One of them being Tesla. So Tesla. Right now, still slightly up, was moving stronger this morning because they have their annual shareholder meeting this afternoon, right here in Austin, Texas.
There you go, and a big vote today.
Yeah, so the vote is should they split the stock price yet again? Because they just split the stock price 4-1 and they want to do a 3-1 split. So this would mean the Tesla that is trading right now at around 900, let's go to a daily chart here, that this would then trade around 300. So right now, shareholders who do have Tesla stock would receive 3 stocks for the one that they have right now. And the price would again be reduced. And they just had a stock split not too long ago. I mean, this was in August 2020, 2 years ago. They split 5-1.
Yeah, so it'd be the second time in 2 years, and this is general. I know ETFs and inverse ETFs, they do reverse splits, and that throws things kind of out of whack. But generally speaking, a split is a good thing because it brings the share price down, and then it does make it a little more accessible to certain investors.
Right. So Coinbase had a big day today. I mean, right now, still up 17%, although they have been pulling back. I mean, Coinbase, ever since they had the IPO, they were sliding down. And with less interest in Bitcoin, this is where they were trading at lowest around 40. And they're coming from a valuation of what, 400? So, I mean, cut by 90%, but big day today and yesterday also.
Yeah, and this really comes with a deal. They announced a deal with BlackRock that will allow institutional clients to buy Bitcoin. BlackRock is the biggest asset manager in the world with more than $8 trillion under management. So investors liking that part of the announcement.
Right. And I mean, I'm interested in this because, as you know, I am in an ARK-F position. And ARK-F is an ETF that actually has Coinbase in their holdings. So this is where today we also see we're up as high as 3% right now, still 1.8%. That's good. We finally broke through the 20-year level yesterday. So I still need to get a little bit higher before I'll be able to sell calls here. But that's definitely a good sign here. Talking about positions that we are holding, right? Reported earnings this morning's and jumped on this. I mean, not only are we up 20%, but look at the amount of volume that is being traded. Typically, the average is over the last 7 days around just a little bit more than 4 million. This morning, already more than 12 million shares traded. So when we bring up here the volume, we just see a pretty big volume spike. And we are only, what, an hour and a half into trading.
Yeah, I mean, huge run up before earnings, and there was some speculation that they had started production during the earnings call. They said that that is not the case, so they actually plan to begin commercial production this quarter and roll out deliveries by the end of the year with 500 vehicles through early 2023. They did post their first quarterly profit, though.
Yeah, although, I mean, they didn't sell anything besides their plant. And if you're selling assets, that really doesn't count. But everybody was expecting that they're posting a loss. And they said, yeah, we are reporting a profit, but that's, of course, it's not sustainable. How much longer can you sell your assets? So they haven't sold a single truck yet. So it was a little bit of a surprise, but that's not what's driving it. It's basically that they said, we didn't burn through as much money as we thought we would our cash flow position is much, much better, and we are on track to producing the truck. So, which helps the position here today up. I mean, earlier it was as much as 25%, I believe. Right now, pulling back at around 17%.
I'll
But good,
take
good,
it.
good.
There was one other positive there too. They do say that they need substantial capital, more capital to be able to produce, but they need to raise 50 to 75 million for the year compared to 150 million previously expected. So that's a pretty big difference to need a third, maybe half of what was originally expected. So I think some investors are thinking, okay, this overall positive.
50 to 75 million. You want to team up, Mark, and give them some money?
I've already given them some money. I know you have too.
All right. So let's talk about the other positions that we have, and especially here about rolling. And this is where I really appreciate all of the comments that you're leaving below this video, because yesterday we received a bunch of comments with things that you want us to cover, and we'll continue this. We gathered all of this, and over the next few days, we will tackle one question after another. So if there's anything that you would like us to talk about, please leave a comment. And while you're already at this, give us a like if you like the format of the new show that we are doing here. So let's talk about rolling. And so let's back up here for a moment and let's talk about NVIDIA. So we are trading the wheel strategy here on NVIDIA. So the way how the wheel strategy works is first, you're selling a put option, you're collecting premium to doing this, then you might or might not get assigned. When you're selling calls. And if you would like to know more, we have this book, link in the description, and also link to a video at the end of the video that explains the option strategy, the wheel option strategy in only 15 minutes. So you can watch this. So I traded NVIDIA. You did not. You traded AMD, Mark, right?
Yes.
But I did this. I got assigned at 195. So my break even is at 177.75. We'll talk about the difference between assignment price, the cost basis, and break even probably tomorrow because it's a good topic. But today, since I did place a trade about rolling, I want to do this. So I sold the call to get rid of, or sold a call of 195 against my existing shares. And Mark, if tomorrow we would be above 195, I would get called away.
Correct.
And my plan is to ride NVIDIA up a little bit longer. So the question is, should I roll this option? And this is where we can go to our calculator. So at this point, I have two choices that I can make. I can either take the NVIDIA, and you see I purchased the stock at 195, and roll it into next week's expiration, which is August 12th. So I have 600 shares, and I could actually go ahead and sell a strike price of 195. So this means that we are just rolling out. Mark, and there's this rolling out and rolling up and out and rolling down and out. You want to talk about this for a moment?
Sure. And just to make sure everyone's on the same page, rolling simply means that you are, in this case, it would be buying back the short call and selling another expiration. So instead of just letting the call expire worthless or potentially having those shares called away, you're actually closing the option that you've sold and then you're selling a further expiration. So rolling out would just be selling the same strike. So basically you're continuing the trade or putting on a trade to establish a new trade with the same strike, but with a further expiration. And for us, we really like to go out 1 week. We love weeklies, and that lets us actively trade these markets, really capitalize on a lot of the time decay. Now, rolling up would be buying back the 195 that Marcus has and selling a higher strike. The reason you might do this is because now you could potentially make more money on the stock. The trade-off is that you're going to get less of a credit because you're selling a higher strike, where if you're at the money or closer to the stock price, you're getting a bigger credit. You could also roll down. This isn't something that we like to do at all. This would be selling a lower strike. But in this case, we would like to sell at our assignment or higher. Marcus, you were assigned at 195.
Right. So let's show you a real live example here. So I was assigned at 195. That is my cost basis. And this is where I sold a call expiring tomorrow at 195. So right now, this call is up 57%. Let's see what happens if we would just roll out. So this means that we are buying back this call to close. And then at the same time, we're putting on a multi-leg. We are using next week's expiration, and we would use the exact same strike price. So 195, also a call. Here we would then sell it to open again. And again, since I have 6, it would be this. So right now, I could get around $2.65, $2.70 for it. So this is one possibility. And if I plug it in here in the premium and say we have 265, it means that I would make on this roll 54% annualized. So I would receive $1,590. So that's not bad at all for holding this for another week. Now, the other possibility is that I could actually roll out and up. So this is where I say, okay, I would now try to buy back the 195 and sell the 200. Why would I do this? Well, if NVIDIA by next week is above 200, I'm pocketing an additional $3,000 on the stock gain. See, when you're using the same strike price, you have 0 stock gain. So here, in this case, I would make $1,590 because that is the premium that I receive. And nobody can take this premium away. That's there. That's there. The other possibility is I'm taking a lower premium. So instead of $1,590, I'm only taking $870. So a little bit more than half. But I have the possibility that if NVIDIA rallies above 200, I pocket an additional $3,000. So bird in the hand versus 2 in the bush. I can either collect the 1,590 or collect 870 with the possibility of making an additional $3,000. And right now, that's what I'm trying to do. So this is why I placed an order, and right now I have an active order in the market, and I can bring this up here so that you see it. So this is where I buy back the 195 expiring tomorrow, and I'm selling the one for next week. And we see I want to get a premium of $1.50. I might lower this because if I can get, as we can see here, $1.45, I'm already making 30% annualized. And that's our threshold, right, Mark? That's the minimum that we want to see.
Yeah, for selling calls, selling puts, the minimum's 30%. If we were rolling out, so same strike, 60% is a rule of thumb that we shoot for. But in this case, the 30% would be appropriate because you have the potential stock gain. And this is where you have to ask yourself, are you neutral or are you slightly bullish, right? Because if you're neutral or you're concerned a little bit about price fluctuations in the market, it makes sense to try and sell the assignment strike because that's going to bring in the most premium, which is going to lower your break even. That's why your break even is so good right here. And I know that you're going to mention that as well, Marcus, but you are profitable on this stock as long as it's above 177.75, which is great because it's trading around 189, right? So you have to assess the situation and decide, are you neutral or are you slightly bullish? And in this case, you're slightly bullish, correct, Marcus?
Yeah, exactly. Because I do believe that NVIDIA has a chance to go back up here to 200, 205, maybe even 220. So I want to ride this one on its way up a little bit. And this is why I'm willing to collect less premium with the potential of making money on the stock. Now, before we continue, let me just ask you, is this helpful at all? Because if it is, do me a favor and click on like. This way, we know that you're enjoying this format where we show you real life trades and what we do in our trading and with our positions. And again, if you have any suggestions about topics that you would like us to cover, leave a comment below. Okay. So I'm actually going back, and since $1.45 is fine, I'm changing this to $1.45. As we can see right now, the mid price is $1.40. So, as time passes and this option here loses some time value, I might get filled on this, so I'm modifying it, and we see that this is now in the market for $1.45. So we'll see what happens there. Nothing else to do right now with the TPR position that I'm in. That's the other one. We probably need to move up to 35 before we can sell this. And we also looked at LVS this morning, Mark.
Yep.
LVS. So I promised you all yesterday that I will calculate my break even. My break even is at 41.70. Yours is where?
I
Just
think it's
around there.
41.34. I think it is. So a
Yeah,
little bit.
so you collected a little bit more premium, and right now we saw that we can sell calls at our break even, and we'll talk more about this next week of why that would make sense and why also we choose at this point not to do it just yet.
Sounds good.
Okay. Now, also, just looking at the wheel scanner, there wasn't much going on earlier. We have a few more popping up here right now. So we have BBWI, Bad Bath and Body Works, and again, the question is: do you want to own the stock? Do you want to own it at the strike price? For me, here, that would be a no. It's been in a downtrend. Mark, what do you think?
Yeah, I'm not a fan. Strike's way too high, but being in a downtrend, I'd rather see it more sideways.
Yeah, CRISPR Therapeutics. I mean, they got down from what 220 to $60. So they might have found a bottom here. I might look into this if we have a possibility to do it at a lower strike price of maybe around 55. But at the strike price that is suggested right now by the scanner 67, I'm not too interested in this.
Biotech is a little aggressive too, and you see that the premium is on the warning side a little bit higher.
Yeah. All right, Marathon Petroleum. Okay, oil and gas kind of going crazy. I'm staying away from this for now. So it just disappeared from the scanner anyhow. And then last but not least, Zoom. What do you think about Zoom? I mean, at some point, is this getting interesting as a buy?
Maybe. I mean, we were talking about this one with our mastermind group all last year, and in passing, I just it, it it might be attractive around the 85 level again, but right now,
Yeah,
no.
let's mark it as a maybe. This way, we can keep it on our radar and see if this might become interesting again. And then we would also just look at the company financials to make sure that this is really a stock that we want to own. So, how are they doing? Seems that
They
they're
are
pretty stable
profitable.
here.
Yeah, they're profitable, and they've been making a higher net income each year for the last 5 years. So
Could be something. Could be something.
yeah,
Anyhow, okay. Hey, again, if you found this helpful, give us a like. Leave a comment if you would like us to cover any more topics. And if you would like to know how to trade this wheel strategy, we'll link to a video right here where I explain the wheel strategy in 15 minutes or less. Take a look at this, and then we'll see you again tomorrow. Stay tuned.
happy trading, everybody.